Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It's an earnings-heavy day. It will be an earnings-heavy week. We've been discussing that, Vivek.
And a weekend.
Okay, yeah, weekend, but we have ACC's numbers at the bottom of your screen. Margins, they look like a miss, 9.5% versus a poll of 10.7%. EBITDA has also come in slightly lower at 436 crore rupees. That compares with 457 crore rupees. So looks like on the operational bit, it's a miss right now. The stock has come off from the highs of the day as well. And we'll, of course, get in Nigel in just a bit. He'll let us know if the volumes, they were in line with estimates and what went wrong on the EBITDA front. We've been talking about higher costs, and that is something that could have hit the EBITDA. But EBITDA per ton will be the other important thing that we'll be watching out for. In terms of the volume growth, it was expected to be around 6% on a YOY basis.
The profit figures to have come in almost 200 crore versus 388 crore last time around. So a steep fall, and in line with the kind of numbers, the kind of results that cement companies this quarter have delivered. A very muted set of numbers. Margins have tempered significantly. EBITDA down almost 21% on a year-on-year basis. Important to be watched out for. Number one, the commentary on realization, the EBITDA per ton, like you mentioned, and also the volume growth figure. What is it that's come this time around? We'll wait for Nigel to join us. But in the meantime, let's start off with the top headlines. Market swings between gains and losses as key indices trade in a narrow range. Midcap index down over 100 points, while banking stocks continue to surge higher.
CARE Ratings is logged in upper circuit following strong Q2 earnings. Revenue and net profit come in at a multi-quarter high, while margins at the highest level seen since Q2 of FY23.
Syngene surges in trade on its Q2 earnings. Revenue is in line with estimates, while margin and profit beat estimates. Company maintains FY25 guidance at high single to low double-digit sales growth.
Dr. Lal PathLabs under pressure post Q2 earnings. Management says they are looking at some inorganic growth opportunities in the southern market, and they maintain their guidance for FY25. Okay, those are the top headlines, but let's quickly take a look at the markets. We were seeing cuts of around 30 points when we started the show. That has become a little steeper. Of course, you can't talk about a big fall, but we've been around those levels, a 45-point cut since the start of the trading session. What's come up from the highs is Bank Nifty. That is an index that should come up for you on the screen. It's up around 280 points right now. It's outperforming the benchmarks, but there's a slight correction from the top that we are talking about right now. The mid caps, they are underperforming. There's a cut of 110 points, small caps in line, and a lot of stock-specific moves. In earnings especially, if there is a small miss, there's a bigger cut that we are seeing, and it's the advance decline ratio again today in the favor of declines.
Again, the small cap index absolutely flat as we speak, so going nowhere, at least in the first 3 to 4 hours of the trading session. Hormaz is standing by the wall. He has all of the top mid-cap movers on his list. Hormaz, over to you.
Well, earnings reactions continuing thick and fast, and there were positive results in today's session. There have been a lot of negative reactions as well. Let's start off with the positive ones first up, and it is Piramal Pharma and Aster DM that are the two major positive reactions that we are seeing to earnings in today's session. 17% higher now is Piramal Pharma. Navin Fluorine off the highs of the day at one point was up 6.5-7%, so slight cool off seen in Navin Fluorine. But the earnings accident of the day is KPIT Technologies. And after that cautious management commentary, the stock is down 13%. And remember, a lot of mid-cap IT was running up yesterday after the results from Persistent and Coforge. But KPIT is the earnings accident. Dr. Lal, Birlasoft, VIP Industries, after that shocking quarter that it had, 6.5% lower there as well. Stocks that are doing well on the back of news flow. And Paytm is one of them that came in on the back of an earnings upgrade, on the back of a ratings upgrade as well from Citi. Sona BLW and Escorts Kubota, the deal that they had, divergent reactions between the two of them, 14% higher for Escorts Kubota, and Railtel after an order win doing well with gains of around 3%. And lastly, stocks that are doing well on the back of volumes in today's session. Syngene is another earnings reaction, 5.5% higher on strong volumes. Bombay Burma and IDBI Bank too having a good day for themselves. Back to you guys.
Okay, all right. So that is about this mid-cap movers. By the way, the volume growth for ACC has come in at 15%, which compares with the CNBC-TV18 poll of 6%. So that's a big beat that we are seeing on the volume. So the EBITDA decline versus the poll must be because of realizations. It was expected to decline 2 to 3% on a YY basis. We'll see We'll see which way things have gone. In fact, we have Nigel joining in now. Nigel, how did the numbers look?
Well, the numbers are weak, as you all have been saying, in comparison to our poll. Actually, they missed estimates. But the reason actually that volume number looks so good at around 15% in comparison to what we were working with or the street was working with of around 6 to around 7% is because if you look at the line items, the purchase of stock in trade, that is up by nearly around 57%. So, it's in all probability there is an element over here of the master supply agreement between ACC as well as Ambuja Cements, because now you have three companies that are under one brand. That's ACC, Ambuja as well as Sanghi. So that could be the reason that in fact we're seeing such a big volume beat, and that volume beat hasn't flown down to a margin beat. And the gross margins actually have seen a sharp contraction from around that 65-70%. It's actually coming at around 61% odd. So we'll require some details over here with regard to this particular item. What was the master supply agreement? How much of the volume actually was sold in the market and at what prices? That's going to be important. Otherwise, on the top line, it appeared pretty okay. But the problem was on the operational front. There has been an element, though, of some cooling off of cost. Case in point being the power and fuel cost. That is down by closer around 12% on a year-on-year basis. Even on a sequential basis, that's down by closer around 22%. So they have got some benefit of this lower input cost, which has supported them. And other expenditure as well, we'll have to find out what went on there. Because on a year-on-year basis, that as well is down by closer around 13%. Both of them deserve special mention. So there is a benefit that's coming from power and fuel cost. Since the top line is more or less in line and the volume growth is better, we need to wait by for what exactly was the master supply agreement. And realizations on expected lines, we have seen that, it's been down across the board. ACC, remember, they have exposure to South India as well, and that has been a problem pocket. So more or less, these numbers are a little lower than what the street was working with. The reason that you're not seeing the stock fall so much is, from the recent peak of around 2,800, the stock has already seen a correction. So a miss, but the street is choosing to look ahead to the second half of the fiscal. Back to you.
Thank you so much for that, Nigel, for taking us through the intricate details of the numbers of ACC, especially regarding the volume figure. Moving on, let's welcome Sudeep Shah from SBI Securities for a technical check on the market. Good afternoon, Sudeep. What are you making of market currently? This point of time appears to be going nowhere.
Good afternoon, Vivek, and good afternoon, Sonal. Vivek, what is happening with Nifty is like post opening, it has been in the tight range closer to 24,400 plus minus 35 points. But in the last few days, we have seen a decent breakdown below 24,500, which was a strong support. So for me now, the all important level on the upside from a reversal perspective would be 24,500, 24,600 zone, where there was a confluence of support, and now that will be the same area for resistance. Until and unless this zone is not crossed and Nifty closes above this, any attempts of a reversal or a recovery would be met with selling pressure. So 24,500, 24,600 band would be important resistance. On the downside, the next major important support would be closer to 24,200 and 24,250 zone. Now, this is the zone where the maximum put writers are there for the next monthly expiry also. So I feel overall now the Nifty will consolidate between 24,200 and 24,600, 650 range. And there could be some stock specific action. Coming to Bank Nifty now, Bank Nifty has been outperforming in the last few sessions. Although today from higher levels, there has been some selling pressure, some profit booking. But nevertheless, if you compare it in the last few sessions, this index has continued to outperform. And the biggest credit goes to HDFC Bank, the way it has, the way the price action has been witnessed there. So I feel HDFC Bank can at least help Bank Nifty and as well as Nifty to arrest the downfall. And from a Bank Nifty perspective, 51,200, 51,300 will now act as an important support, and we see some scope of a recovery back to 51,800, 51,900 in the banking index.
Okay, all right. Thank you so much for joining in today with those technical checks on the Nifty as well. We'll slip into a short break, but as we do that, a small programming note. As we prepare to ring in the festivities this Diwali, tune into CNBC-TV18's Market Movers Forum today 3 p.m. onwards, featuring guests like Ramdev Agrawal, S. Naren, Nilesh Shah and Navneet Munot to help your portfolios prosper this Diwali.
Welcome back to Midcap Radar. CARE Ratings is locked in upper circuit today following strong Q2 earnings. In our special segment, Midcap Spotlight, Vamakshi will focus on the company's earnings.
Well, absolutely, Vivek. It was a strong set coming in from CARE Ratings, and Q2 generally is a seasonally strong quarter for the company. But this time around, revenue as well as net profit has come in at a multi-quarter high. Margins too have come in at the highest level seen since Q2 of FY23. Revenue saw an uptick of almost 22%, while operating expenses grew at a much lower pace of 13.1%. Resultantly, the operating profit expanded by 33%. The margins too came in higher by around 401 basis points, which is at almost 47.48%. Net profit too saw an uptick of almost 31%. So overall, it seems like a good set of numbers for CARE Ratings. We also have some comments coming in from the management in the press release. The managing director said that they are proud to be the first rating agency from India to foray into the sovereign and global scale ratings. On performance of its subsidiaries, he also added that the step-down subsidiary in South Africa received regulatory approval to offer credit rating services, including sovereign ratings in South Africa itself. CARE Edge Africa and CARE Edge Nepal have reported robust growth in his opinion, and he also added that CARE Edge Analytics and CARE Edge Advisory continues to improve performance. So overall, it seems like a very good performance from the company, good commentary coming in from the management. Resultantly, the stock is locked in upper circuit.
Oh yes, big move there. Thank you so much, Vamakshi, for analyzing those numbers for us. We'll slip into a short break. When we come back, we'll get to more on the markets and also a lot of stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Well, a lot of stocks on our radar. Johnson Control, that is slipping in trade after reporting weak numbers sequentially. Upasna is joining us with more details on this one. Upasna.
Well, the company has reported a weak quarter in Q2 FY25, even though the losses have reduced on a one-year basis, but sequentially numbers look quite weak. Now, if we see the numbers on a one-year basis, revenue stood at 396 crores with an uptick of 41%. And EBITDA loss remains at 27% versus a loss of 44 crores. Mind you, there's an exceptional item of 12 crores in Q2 FY24. Now, loss stood at 30 crores versus a loss of 56 crores seen on a one-year basis, and company's gross margin stood at 28% versus 27% same time last year. Now, when we look at the company's numbers sequentially, revenue saw a downtick of 60% and EBITDA loss stood at 27% as stated earlier versus a EBITDA positive number, that is 56 crore seen in the last quarter, that is in Q1. Loss stood at 30 crores in Q2 versus a positive PAT, that is at 36 crores. Now looking at company's key segment, that is the cooling product, which is 95% of company's sales, revenue stood at 383 crore with an uptick of 45% on a one-year basis, but sequentially this segment has seen the revenue downtick of 61%. That explains why the stock is down today, tanking in trade today.
Thank you so much for that, Upasna. Also remember, when it comes to Johnson Control, Hitachi, remember globally, the company has an MNC parentage. Globally, Bosch has gone ahead and decided to acquire the HVAC business of Johnson Control Hitachi, which means that in the next 12 months or a little earlier than that, you will see a change in control as far as Johnson Hitachi 2 is concerned. Losses narrowed on a sequential basis, but today markets are seeing, the stock is seeing quite a bit of a sell-off in the trading session today. Well, some of the other stocks that have seen quite a bit of a recovery intraday. Number one is RK Forging, Ramakrishna Forging. The company just came out with its numbers year on year. RK Forging, the PAT appears to have grown quite significantly, and the stock has recovered quite sharply from the day's lowest points. We just had the results flashing on your screen some time back. At the back of that, you've actually seen the stock move higher. Cement stocks too, you've had a whole host of cement companies come out with their results. Some of the cement stocks, especially Ultratech Cement, seems to have recovered quite sharply from the intraday lows and also from the recent lows. ACC just came out with its numbers, trending near the day's lowest point, but Ultratech Cement almost up by 3% today. But with that, it's a wrap on this edition of Midcap Radar Mutual Fund Corner when we return.